How's it going, everyone? I hope you're all doing well. I want to welcome you to a brand new lecture where in this video, we're going to discuss the reversal sequence. Now, the reversal sequence is the sequence of events that occurs at every single reversal in the market. I'm going to break down a market maker buy model trade that I took on NASDAQ, showing this reversal sequence playing out. And so before we get into the breakdown itself, we'll first play the execution video, and then we'll take a look at exactly why this occurred and how I executed this trade. And so without further ado, let's first watch that execution video. Now, before we get into the breakdown itself, I first want to lay the foundations for the reversal sequence. So the sequence of events that must unfold in order for you to anticipate and be able to trade a reversal. Now, the first step in the reversal sequence is to identify the narrative. Now, narrative, very simply, is where we define two specific price levels, point A and point B. And the narrative is that price will go from price level A to price level B for a bullish scenario This is, of course, price level A, where we anticipate price going from lower prices to higher prices. And for the bearish example, we anticipate price going from the upper price level, point A, to the lower price level, point B. Now, what we need to be able to do is identify these two specific price levels. Now, the way we do that is by following the higher timing protocol, which is what we've laid out many times now. The function of the higher timing protocol is to allow us to identify the narrative, those two specific price levels, point A and point B. Once we have those specific reference points, point A and point B, which is what we're going to call points of interest and drawn liquidity, we have now established the narrative. And once the narrative has been established, and the narrative is of course correct, the narrative needs to be correct, otherwise the reversal sequence will not play out. Because remember, what we're trying to do is anticipate that this is going to be a reversal. So price is going to go lower, form a low, and then go higher. So this is the reversal. Or price is going to go higher, form a high, and then go lower. This is the reversal here. And so of course, in order for this to be a reversal, we need to have correctly identified the narrative. And if we've correctly identified the narrative, then the reversal sequence will unfold next. Now, what's very important for me to say is that the reversal sequence only works if you've correctly identified the narrative. Now, I see so many people taking trades based on patterns. They see, for example, a breakout formation in a macro window after price has formed SMT, and then they take the trades. And then they wonder why exactly that trade fails. Well, the reason why it fails is because your narrative was incorrect. I'm telling you that's the reason why. If your trade fails, it's because you incorrectly identified the narrative. Maybe you've identified the incorrect point of interest, so the origin of the move, or maybe you've incorrectly identified the drawn liquidity, which is the terminus of the move. If you've incorrectly identified either of those reference points, then how can you expect the trades to succeed? Because you haven't identified the narrative correctly. And so it's very important that you don't use the reversal sequence as a pattern. You use it to confirm the underlying narrative that you've already established on the higher time frame. And so if you don't establish the narrative, you're simply pattern trading, and that's why your trades are failing. It's as simple as that. So now that we're on the hourly time frame of NASDAQ, I'm now going to show you exactly how to establish narrative. Now, before I do so, I'm going to play a clip from an outlook that I did outlining what I was looking for going into this specific day. Now, we have not yet closed above the previous week high, so I cannot yet move my invalidation level to here, just to show you we've not yet closed above it, and so I can't move my invalidation level. But what I do see is we've got this bullish mitigation block, we've got this bearish order block that has been inversed. Notice how many times it's been utilized as resistance on price, and then supports. Once it's placed above, must be utilized as supports. And so, as long as price remains above this array here, order flow is bullish. We did close below it, but this didn't mean anything. Why? Well, because ES had not produced CSD. So just because we saw closure on NASDAQ means nothing. We do currently see a daily SMT the highs and a weekly SMT the highs. And so if we displace below this array here, that would validate a sell program, and then previous week low become the draw. But until that occurs, looking for higher prices as long as price remains above this bullish mitigation block. And so what I said in that outlook was, as long as price remained above this bullish mitigation block, order flow is bullish, and I was anticipating higher prices. Why? Well, because if you'll notice, we've got this bearish order block here that has been utilized as resistance multiple times. Once price displaces above it, what must it be utilized as? Support. And so as long as price remained above this bullish mitigation block, which is this bearish order block that had been inversed, order flow is bullish, and so what we're anticipating is higher prices. Now, the reason why identifying order flow is useful to us is because if we know order flow, then we know we can frame market maker models. Because as we know, every time price expands higher, retraces lower, expands higher, that's a lower time frame market maker buy model. Market maker buy model, market maker buy model, market maker buy model, and so on. And so what you'll notice is the trade that I took actually played out in this small segment of price action here. We've got price expanding higher, we've then got a retracement lower, followed by an expansion higher. And so I know order flow is bullish as long as price remains above this bullish mitigation block, meaning I can frame market maker buy models. Now I need to know the drawn liquidity. Well, what we had is this buy side liquidity pool here, which is a previous day high. And so this was my drawn liquidity for the day. Let's call this DOL. Remember, this is that upper price level that we're determining for the narrative. The lower price level is our point of interest, and our point of interest is always our invalidation for the current delivery program, and so in this case was this bullish mitigation block. Meaning, we can draw an arrow from our point of interest to our drawn liquidity, and this is what we call narrative, as we just discussed. We need to know those two specific price levels or price ranges where we anticipate price going from to. So we've got point of interest and we've got drawn liquidity, and this is what we call narrative. Now, in order for this trade to play out in the lower time frame, my narrative must be correct. It has to be correct. If it's not correct and I'm looking for lower prices and price goes higher, then obviously the trade is going to fail. And so my narrative must be correct. And in this case, my narrative was correct. And that's why this trade played out on the lower time frame. Once your point of interest is reached, you then drop to the lower time frame. And so now that we're on the lower time frame, this is actually where the reversal sequence will unfold. This is where we're going to see the signatures that we need to see to confirm a reversal. And what I mean by reversal is this is a sell program. This is a buy program, meaning at some point a reversal occurred where we went from sell program to buy program. And that is exactly what we're trying to confirm. And so this is the market maker model that I traded, original consolidation, left side of the curve, smart money reversal, right side of the curve. Now, in order to confirm a smart money reversal at our point of interest, remember, if I just zoom out quickly, this is our point of interest, this blue box here, and this is our drawn liquidity, which is that high. Meaning we're going to wait for our point of interest to be reached, we're going to confirm it, and then we're going to trade it towards our drawn liquidity. Now, in order for the reversal sequence to play out, we require 3 steps. The first step is to identify a change in the state delivery. What that means is where price goes from a sell program into a buy program, if we're looking for longs, or a buy program into a sell program. And because we're looking for longs, we're waiting for price to go from a sell program into a buy program. Now, what we can see is that once price reached our point of interest, we're now looking for a change in the state delivery. And what I saw is we had this imbalance here that was being utilized as resistance multiple times before expanding lower. This is not a change in the state delivery. Why? Because price has not invalidated the sell program yet. However, what we then see is that we have these new imbalances that forms that displace below this low here. We extend them to the right. Price utilized them as resistance, failed to expand lower, and then displaced higher. Meaning on this candle here, 9:59 and 45 seconds, a change in the state delivery was confirmed where price went from sell program into buy program. That's step number 1, change in the state delivery. Step number 2 is to identify SMT. And SMT is a cracking correlation at the smart money reversal. If we now look for that SMT, what we can see is that YM did not take out the low from 940 to 950. As we can see, this low remained intact with high lows. NASDAQ did actually take out the low where we had lower lows. And so we had a 10-minute cycle SMT at the smart money reversal. What confirms SMT? A change in the state delivery. Because once CSD is confirmed, that then validates the reversal. And what validates the reversal? SMT. And finally, we need time to align with price. How do we do that? Well, there's a macro window from 9:45 until 10:15. What we want to see in that macro window is either price produce a reversal or expansion for us to say that time meets price. And because the reversal is occurring between 9:45 to 10:15, we can say that time meets price. And so now we've got all 3 things that we need to identify that reversal sequence or confirm that reversal sequence. Remember, price has reached our point of interest. That's step number 1. We have a valid drawn liquidity, which is where we anticipate price gravitating towards. Number 3, we've had a change in the state delivery, which actually confirms the reversal itself. Number 4, we've got SMT, which confirms the reversal. And number 5, we're now waiting for time to align with price in order for price to begin expanding into our drawn liquidity. And so this is the reversal sequence. Okay, you identify your narrative, A and B. That's step 1 and 2. Step number 3, you wait for a change in the state delivery, meaning you wait for that reversal to be confirmed, where price goes from sell program to buy program, or buy program to sell program. You confirm that reversal with SMT, and then finally, you wait for the right time for price to actually begin moving towards your drawn liquidity. Those are the 5 steps. Once the reversal is confirmed at 9:59 and 45 seconds, all we have to do then is take the trades. We're not going to discuss execution in depth here, but entry was at the inverse value gap because this was the invalidation for the buy program. Stop loss was below this swing low because this was the previous stage of accumulation. My target 1 was the original consolidation. This is the high of the retracement lower. This is target 1. However, what we did see is that price then failed to continue higher towards the drawn liquidity. It in fact continued towards the drawn liquidity later on in the day and didn't actually reach it. Now, this is the importance of trading in line with your narrative, because even if your narrative, your drawn liquidity in this case, is not reached, you can still have a profitable trade. Why? Because you're still trading in the direction that price is moving. Although it might not reach that specific level during that session or during that day or even during that week, as long as you're trading in line with where price is moving towards, the probability of you having a successful trade is significantly higher, and that's why you need to identify the narrative. And if I just draw in some arrays that formed on the left side of the curve, we've got this inverse fair value gap here, which is of course our entry points. If I just draw in 2 more imbalances, we've got these 2 inverse fair value gaps here that we utilized as resistance multiple times on the left side of the curve. Once it's placed above, must be utilized as supports. We've then got these bullish mitigation blocks that we utilized as supports. We've got another bullish mitigation block that was utilized as support on price before expanding higher into that original consolidation. If price was going to continue higher, price had to utilize this bullish breaker here as support, and because price actually went below it, that was a change in the state of delivery. Are we going to trade this? Are we going to go shorts here? No. Why? Well, because number 1, it's against our narrative that we've identified on the higher time frame. Number 2, the time is off. We're outside our macro window now. And so just because you're seeing those reversal signatures does not mean you should take the trades. You have to trade in line with your narrative if you want to take the highest probability trades to give yourself the highest probability of success in the long term. And so just to recap everything we've discussed so far, identifying your narrative, so point of interest and drawn liquidity, that is high priority, and it needs to be correct for your trade to succeed. If it's incorrect, I promise you, the trade's going to fail. It's as simple as that. Your narrative must be correct. Your point A, point B, point of interest, drawn liquidity, it has to be correct. If it's wrong, the trade will fail. Thirdly, once your point of interest has been reached, you drop to lower time frame and you wait for a change in the state delivery. Once that change in the state delivery has occurred, you then wait for SMT. That's what's going to confirm that reversal. And finally, number 5, you wait for time to align with price, because even if you're seeing the signatures of a reversal, if the time is not right for price to begin moving towards your drawn liquidity, then price is not going to move. Because remember, these markets don't just run on price, they run on time as well. And so we wait for time to align with price, because then we can anticipate expansions into our draws on liquidity. And so I hope you found some value from this lecture, where we've discussed the importance of narrative and the reversal sequence, and when exactly the reversal sequence will unfold and when it will succeed. I highly suggest you to go through your own charts and see this reversal sequence playing out in real time. Look at when it worked, when it was aligned with your narrative, when it failed, when it was against your narrative. So going forward, you can be more selective, increase the probability of success by trading in line with your narrative. I hope you found some value from this lecture, and with that, I'll see you in the next video. Be safe.